Hi, good morning to everyone. I am Dr. J. Radhashri, Hastram Professor in Commerce. Today we are going to see about the functional accounting. In that functional accounting, we are see about the Annuity method. In last class itself, we have discussed about the straight line method and the return on value method. The third method of the depreciation is the Annuity method. It is totally different the straight line and return on value method. Let me see what is the Annuity method. The Annuity method of depreciation is recognizing that the money is invested in an asset. There is a interest cost allocation with that investment. Let me see the annuity method. The annuity method what is doing in the depreciation. The annuity table is fixed for the depreciation of the calculation. In the redundant value method, the owner of the goods itself fixed the percentage. The straight line method also, the owner of the asset, they will fix the depreciation of the asset by the using the product. But when we see in the anti method, the product is can be depreciation by a particular percentage by the calculation of when you are using that asset. It can be taken place by the anti method. So the anti table is fixed by the calculation of the useful lifetime of the product. In that way, the depreciation of the anti method, it is used when asset of the cost, asset having a long useful life. The opportunity of the cost stock in the asset. The annuity table is fixed at tax. The depreciation of the interest is be calculated by changing or charging of the annual income. We can supply of the every year in same amount of the annuity is charged to the profit and loss account. In that way, the depreciation of the annuity method is taken by the interest of the year. The interest of the year is the open book value. That is the real cost of the product value when we are purchasing from a particular person. In that we want to calculate the rate of the interest. By the annuity of putting into the amount, we want to minus the interest of the year. The annuity amount is showing in a annuity table, that is the fixed. It can't be changed for any purpose also. The annuity table, it shows their product. The some product is we can be able to calculate as a 5 lakh, 50 lakh or 1 crore. In that way of the year product using, the annuity table will fix one percentage of amount. That amount it should be calculated for the every year. In that way, we can see one sum regarding this for simple anti-method problems. Machines was a cost of rupees is 40,000. The lifetime of the machinery they are using for the 3 years. The interest is a 5% per annum. The annuity table shows that the 5%. For that 5%, it should be calculated of the 0% of 3672 as be taken by the anti-table charging. We want to calculate it from there. Total of the cost is the 40,000. The annuity table showing for the percentage is 5%. So we are calculating is equal to 40,000 into 0.3672 is the total amount of the 40,688. It is the now calculation of the first years. In that way only, the anti table is the calculating by the asset, building, factories, furniture or all any cost of the fixed cost. We can be use the anti table. In any equipments regular we are using their product, we can be taken as a anti method table in the calculation of this. The annuity method of their, the opening value if taken by for example is a 40,000. The round off of the rupees it can be a 40,000 in case they are taking into a 13 to 19 90,000. The percentage of the 5 percentage, the annuity table is showing the 30,000 988.5. The fully of the depreciation is closed by the 0. It is the properties of the depreciation and the asset value of annuity method. The next we have seen about the cost of the asset is a 50 percentage. For and we can say the house is purchasing as a 50,000. The useful life of the house is the 4 years. for the 4 years, how they are finally they are selling their house for a after 4 years, the depreciation amount is can be calculated for 6%. In that way of the 6%, the annuity table will show of the calculation is a 0.62886 to 886 as the fixer. So we want to calculate the total cost of the product, and we will get the annuity table amount. That way only we are calculating the annuity table method. Now we are see completely say about the annuity method. Thank you for listening.